Welcome to the Specialist Trading Weekly Forex Review for the week ending April 29th, 2011. Now in this week's presentation, we're going to cover this week's strategy number 5, intraday trades. From time to time I like to show you how this method and technique can work just as well on intraday bars as it can using daily bars. So we're going to show you some examples just of how the process works. But before we do, as always, we ask that you please take a moment to view our disclaimer. I'm going to show you the performance results of trading strategy number 5 on intraday bars. But remember, we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's Forex review. Okay, I'd like to start out this week's review with an email that was sent, and I just want to, answer this question because I know that many other people can possibly have the same question, especially our beginning students. And it starts off by saying, "Hi, I would like to know if the Australian dollar trade signal issued is stopped out at break even, or is it still in play according to the 50% rule?" Okay, now this is a great question because the 50% rule is something that we provide our students with that is a money management technique. In other words, it's a way to move your stop to break even. The main thing I have to stress here, though, is probably because of the way it's labeled as a rule. It is really a choice, meaning that you do not have to apply this technique. It is not standard requirement for trading strategy number 5, whether you're trading intraday or trading daily bars or even monthly bars. This is a choice we give you as to whether you want to trade the technique either conservatively or aggressively. In other words, if you want to trade aggressively with a little bit more risk and you want to be able to give yourself a little bit more room within the trade, then you do not employ the 50% rule. That's it. If you would like to be more conservative, meaning that once the price has gotten to a certain level and you move your stop to unchanged, that's applying the 50% rule. But the rule in itself is not something that must be applied all the time. It's up to you. We give it to you as a suggestion that whereas you may want to be a little bit more conservative, and then after paper trading for a while, which we always suggest, it's up to you to decide whether you want to employ this or not. Okay, so remember, this is not required that you use the 50% rule. But let me just show you, excuse me, in order to answer this person's question, they were stating like, should we still be in the trade or is it stopped out? Well, once again, it's up to you whether you want to be in the trade or not, but let's just look at the actual trade. Now, for all our members, we always provide the signals on a nightly basis when they are generated, and we let you know the night before whether there's a signal or not. Now, on the 26th of this past month, just this last week, we issued all of our members an alert telling them that there was a buy signal in the Australian dollar using strategy number 5. So we tell you where to get in, the price to get in, which was at 1.0792. We tell you where to exit, which was at 1.0906, and then we give you the stop placement level. Okay? And so if everything runs according to place, you would have made 114 pips, which we did. All right? Now, here's the trade. As you can see, circled in blue is the 26th. That's the night that the signal was issued, and we told our members to purchase it on the next day if we traded 1 pip above the high of the signal bar, all right, which is right here at 1.0792. So we entered long and we placed our stop immediately. Now, if you wanted to employ the 50% rule, once you traversed up to the 50% between where you entered and where you exit, you would simply move your stop to unchanged, and that's up to you. If you wanted to do that or not, it's simply up to you. If you did not want to do that, then you would leave your stop where it was right here, and you would simply exit at the exit level. So that's how simple it is. It's really, not meant to be that complicated. We're not trying to control your trades. Remember, the easiest way to explain this is that we're giving you tons of information. My 34 years of experience of trading virtually all the different markets, and I've applied them into a very nice individual course here for you so that I'm giving you a lot of options and variables so you can come together with your own trading plan. I don't want you to trade exactly the way I trade. That's why as I've told you a million times, these are strategies. They're not systems. I want you to become part of the process, and I want you to develop your own process so that you can decide to trade conservatively, aggressively. You can decide to use the 50% rule. You can decide to move your stop up. It's all up to you. So I give you all of these options, and then ultimately you have to decide. That's why we say paper trade for a while so you can come up with these different ideas and ways in which to trade. All right, so that was our signal, by the way, for this week in the Australian dollar, which made 114 pips in just a couple of days. Now, let's look at strategy number 5, intraday trades. And we're going to look at a 240-minute bar, which is basically a 4-hour bar. This is a very common way of trading the Forex markets. The 4-hour time frame has gotten to be very popular, and a lot of people like to use that. So we'll show you how strategy number 5 can work using the 4-hour time frame, or the 240-minute bars. Once again, though, we have to tell you that these signals on an intraday basis will not be furnished for you. That's why we say learn the strategy, understand the concept and techniques behind strategy number 5, because if you do decide to trade it intraday, you will have to be, know the strategy well enough to know where your entries and exits and stop placements are, because we will not be furnishing that for you. We furnish the entries and exits on a nightly basis for daily bars, but not for intraday. All right, so here's looking at the British pound on a 4-hour chart, 240-minute chart. Now, according to all the rules and all of the qualifications, we have to look for a setup bar to go long because we are above the buy-sell line. All right, we're only going to be looking for buy setups. And this bar right here meets all the qualifications. This was on the 27th of this week. So knowing that we have our setup bar here on a 4-hour chart, we would enter if we traded 1 pip above, which we did. So we entered long at 1.6579. We have our stop placement, and we ultimately came up with our proprietary exit level, which came out to be 0.6659. So having known all this information, it's very simple. Prior to entering the trade, you can simply weigh out, see if you want to take this trade or not, and enter your orders, and then just sit back and wait. It's like fishing. Not a lot of monitoring to do if you don't want to. And as you can see, we made a quick 80 pips in just about a little over 4 hours. Okay. Now, one of the things that especially the beginning students always notice is that they say, boy, Steve, I love this strategy, but man, I made 80 pips, but I could have made an extra 80 had I only stayed in a little bit longer. Well, that's true. That you can see that happen from time to time. We're not, in any way telling you that you're going to be getting in at the bottom and getting out at the top. We're only trying to capture a nice momentum move within the particular setup. So that's what we're looking for. And many times, you'll be leaving some pips on the table, and other times, as you'll see in some other examples, you're not leaving them on the table at all. For example, right here in the next trade we're looking at in the euro dollar, now this happened on the 24th, we are once again above the buy-sell line, so we're only looking for a buy setup. Here's our setup bar. This meets all of the rules and qualifications, so we entered once we traded 1 pip above. Excuse me. We entered long at 1.4579, placed our stop at the proprietary stop level, and then we came up with the calculations for exit. So we knew well in advance where we were going to exit on this intraday trade at 46.25, okay? And in this particular case, as you can see, we got right up to that level, and look what happened. The trend changed. So as we say, oftentimes you'll see that you'll leave a lot of pips on the table, and oftentimes you'll see that you got out right at the top nearly and made a quick 46 pips, and then things change. So it's really, a type of thing where you'll see over time that the method is very consistent, and that's all we're looking for. We're looking for this consistency. As I've said hundreds of times, we're looking to hit singles. We're not looking to hit home runs. And so just, look at it that way, and, you won't feel as if you're leaving things on the table, because after time, you'll see you'll be having some real nice exits. Our last example here is in the US dollar, Canadian dollar. Now, as you can see in this particular example, we're actually below the buy-sell line. Even though we closed 1 bar on the 4-hour bars above it, we have a very nice signal bar here to go short. This meets all the rules and qualifications. Remember, once again, if you're not familiar, you don't understand why this is our setup bar or signal bar, go to the video learning section and watch the video and understand the rules of what we're looking for. All right. You also have to understand where to place your stop as well. That's also a common mistake. Many people, even though it appears very simple in these videos, they often place their stop in the wrong place. And then lastly, the most difficult out of the 3 aspects here is determining how to come up with your exit level. And that, once again, is a proprietary calculation, which is, after time is very simple to calculate, but in the beginning, many people get that wrong as well. Now, our exit calculation came out to 94.68, which once again was right at the intraday bottom here of this little run. So we made a quick 50 pips. Once again, most of these trades will last anywhere from 2 to 3 bars, which means you'll be in them for about 8 to 12 hours. So you have to kind of pick your spot, see if it fits within your day, but we have increasingly a number of consistent trades in this particular time frame. Now here are the points to remember when day trading, regardless if you're using 240-minute bars or if you're using an hourly bar or even a half-hour bar. Remember, the same daily bar rules apply. So we're not changing anything to accommodate because we're at a different time frame. So we're not going to say, well, we have different rules for intraday trading that we do for daily bar. Same exact rules. Also, the same exact rules apply if you want to employ the 50% suggestion or 50% rule. You can employ that if you want to be more conservative, or you can not even use it if you want to be more aggressive. It's totally up to you. Remember, if you're not familiar with the rules to that particular technique, go to the video learning section where I explain it in detail. Now, if you're trading intraday, especially 240-minute bars, you're going to get on average 1 to 3 trades per day, provided that you look at more than one market. If you're just looking at one market, you may get 1 to 3 trades per week. But if you're looking at basically the big 6 or the big 7 of the Forex markets, you'll get anywhere from 1 to 3 trades per day. All right? But because we're looking at smaller time frames, the gains are going to be less. We're not going to be looking at these 100, 150, 250 pip gains. We're going to be looking at 40, 50, 60 pip gains. Okay? But you'll only be in the market maybe 4 to 8 hours. Another advantage is there will be less risk. All right? We won't be looking at 100, 150 pip risk. We'll be looking at maybe 40 pip risk or 50 pip risk. So there's a lot of different ways to look at this. Just remember, these are points to remember. Also, these are things that we want you to paper trade first. Simply do not go out and say, boy, this is great. I can use this on an hourly time frame. Paper trade to see if that time frame actually fits with your trading style. All right, so let's recap. We're looking at strategy number 5. We went over an email where we talked about an actual trade that was alerted to all of our members this week, and whether you can use the 50% rule. Remember, the 50% rule is a choice. It is not a requirement. It's totally up to you. So there's no reason to ask where we stopped out according to the rule. We're only stopped out if you were possibly employing or not employing. It all depends on how you're trading it. Now, we happen to look at intraday bars in this week's recap, and I just went over there are a lot of different aspects that go in with trading intraday, but there are also similar things. The rules are entirely the same, so there's no difference in terms of employing the rules, but there are differences in terms of point gains and in risk. So remember to look at those when you're deciding whether you want to trade intraday or not. As always, the only way to get around all of these different things is to learn the strategy. You should know these strategies like the back of your hand. I told one of my students that you must learn these like, you know, they're second nature to you. And once you do, there will be no reason to ask any questions. You'll know everything. So the reason why you're asking questions is because you haven't learned the strategy yet. Therefore, if you're asking questions and I'm answering them per email, this means you should not be trading yet. You should not be committing any capital to the strategy number 5. Once you stopped asking questions, it means that you really fully understand the process, and therefore that's the time you should be trading with real money. Our edge here is consistency. As you've seen in this video and in constant videos, we're looking for this consistency. That is the true meaning of success. We're not talking about hitting home runs. We're going for longevity. Lastly, if you have any questions, please do not hesitate to email me at stephenprimo@specialisttrading.com. In closing, I ask that you take one last look at our disclaimer. I showed you a lot of performance results from the intraday trading of strategy number 5. But remember, we can in no way guarantee that any of these results will be repeated in the future. Thanks so much for joining this week. Have a great weekend, and we'll see you next week. Bye-bye.